It's a bad joke. Dropped at the first sign of trouble. They're only as good as the world allows them to be. I'll show you. When the chips are down, these civilized people, they'll eat each other. See, I'm not a monster. I'm just ahead of the curve.
What is going on YouTube? It's Brendan from Market Makers. Big video for you today because this is a short trading week. Thursday, the market's closed. We have Thanksgiving here in the US, and Friday is a limited market day because it's a big retail sales day, Black Friday. I think a lot of European countries are doing this as well. Guys, we got to talk about what's going on in the market. I'm going to show you a fractal analysis of the S&P, something you'll only get on this channel. The market's rallying as I'm recording this video. As you can see on the thumbnail, I'm looking for a rally top 45.55 to 45.85. I'll show you why on this fractal analysis. But real quick, I want to spend a moment and talk about the divergent cycle that we've been talking about the last couple of videos. Something you saw in 1929, 72, .com, and in 2021 for the current market. The small caps leading the mega caps up, the small caps peaking out, topping out, and then cratering as the S&P continued to rise. We had this happen with the Russell, Bitcoin, NASDAQ, which has a lot of mega cap in it, but it was tech. It was super high PE, all topping out in November 2021. And then the Russell, NASDAQ, everything else continued to fall while the S&P rose till January, and you have the same exact divergence playing out now. Right now, the Russell is still down 26, 27% from its all-time high, and the S&P is only down 6 or 7%. I want to play a quick video clip. It's 1 minute long. Jeremy Grantham explaining this as well, and then we'll talk about it on the other side, why this happens.
If you go back to 2000, which is the previous leader in speculation, let's say, what happened there is the market peaked in March of 2000. And between March and September, the pet.coms basically went out of business. The internet stocks basically went down 80%. But the whole .com, the whole TMT bubble burst, and the industry, which had been 30% of the market, declined by 50%. The S&P was unchanged. And you could have said during that 5-month, 6-month window, oh, isn't that healthy? They're selling the flakiest pet.coms and they're buying Coca-Cola. What's not to like about that? That's exactly what happened. And I like to think of them as the kind of pessimism termites. They ate through the craziest first, and then the junior growth stocks, and then the intermediate growth stocks. And then finally, Cisco, which was for 8 minutes or so, the biggest company in the world by market cap. And they were all down collectively 50%. The balance of the market was up 17%. So that looked incredibly healthy, but then the termites reached the broad market and the entire 70% rolled over and fell 50% in 2 years. And the NASDAQ was down 82%.
So specifically focusing on .com in that clip, this is not something unique, okay? Understanding cycles and patterns in the market will help set you up for success in the market. And .com, we had this exact same thing play out. We had tech media telecom bubble. And what happened? Those stocks all went down, the pets.com, as he said, and then people ran to the comfort and safety of companies like Coca-Cola. But what ends up happening, what he compared to termites eating out the base of the structure and the structure falls, what ends up happening is the market, the high flyers will trade down to the broader market. So when you have the Russell 2000, more representative of the broader economy, trading 26, 27% off its high, whereas the S&P is only down 6 or 7% off its high, what is more likely? 10 stocks in the S&P, which account for 90% of the gains, 10 stocks carrying the rest of the market up, or the rest of that market like a big, heavy, wet blanket pulling those 10 stocks down. Because remember, the market has never put in a bottom in all 12 recessionary cycles prior to a recession, not once in stock market history. Very important facts you guys need to be aware of. And I try to share that with you here. You know what? Let's go ahead and jump right into the show. I know Lee's really excited. This is the only video we're doing this week, so he basically has a week off. The next video will be Monday, guys. Lee, let's go ahead and start the show. All right, guys, let's go ahead and start the fractal analysis here on the S&P. Currently, S&P trading at 45.33. What am I talking about when we're looking at a fractal analysis? Fractals are self-repeating patterns. It's part of the natural law of trading, the same way the greats traded, such as Charles Dow, Richard Wyckoff, W.D. Gann. So you're looking for repeating patterns. Remember, if you understand market history, as Jesse Livermore said, there is nothing new in the market. What's happened before will happen again. This is why you get bubbles. This is why you get bull runs. This is why you get the bear markets. All right. The market just repeats. It's a circle of cycles. I want to show you guys something here, and then I'm going to show you how you can forecast this. Okay. So let's look at this. So June 17th, 2022. We had this sell-off after the all-time high, and then this massive 19% rally. And then this rally was given up, right? What happened after this rally was given up? Well, we sold off, and let me go ahead and get this. We had an equidistant move here of 19.33%. So essentially a 19% move up, 19% move down. And then what came from this move down? This massive rally. We had our market low at 34.89, and you got a massive rally of just about 32%, 32.13%. So let's see. Could we have caught this move with Fibonacci? What's the significance of these fractals here, these two waves? In market geometry, this forms what's called a signal wave. When you have two equidistant moves like this, you can use advanced Fibonacci techniques and forecast where the rally could get to, okay? So we're going to go ahead and look at this with a trend-based fib. Going to take these exact same points here, your low, your high on the rally high, down to that sell-off low, the 30.49. Look where the 1618 got you, 46.04. Where did the rally get to after a 32% up move? Got to 46.09. Pretty amazing, right? So what is Fibonacci? Fibonacci is the measure of proportion. This is a golden ratio, right? Phi. So this is the measure of proportion. This is a harmonic expansion of this rally after two equidistant moves here. Market symmetry. Could market geometry get you this with a mathematical target? Well, in this case, it could. If you took 18.95 and 19.33, got the average, 19.11, and you multiply that by 1.7, which sounds arbitrary. I'll explain that. You get 32. What's the significance of 1.7? It's the root of 3, guys. So law of 3, right? It's the root of 3. 1.7 times 19.11 equals 32. You can get this target with market geometry, sacred geometry. You can get this target with the natural law harmonic expansion of Fibonacci, and you nailed it within $5. Those of you that are on our Discord know that we shorted this move. We shorted it up at 45.92 and caught this 11% drop had you held the trade. We shorted this move here at 43.82 for a nice 300 bar drop, not to mention the little drops in between. And now we have this rally. So we're going to do a fractal analysis of this current trend and see if we can find any market symmetry here and get some predictions of where this market can go. If you guys enjoy this type of content, something unique in YouTube, definitely smash the like button for me. Hit the subscribe button if you have not done so. Guys, and consider joining our room with 12,000 freedom-seeking individuals. Our Black Friday sale, I'd be remiss if I did not say it. Our Black Friday sale, you get 1 month for free. Try out SimpleFX or BingX. Message Lee in the video description. I'll pin the Telegram and the YouTube comments. Message Lee. He'll walk you through it. He'll get you set up. Love to see you guys in the room, and you get all of our indicators for free. You get our trade signals, TA, live streams. It's all part of the market makers experience, and you can start your journey there and see how you guys like it with no strings attached. I think you'll really enjoy the room. So message Lee, get that process started. All right, guys, so let's go ahead and jump back to this fractal analysis here of what we have. So looking for a symmetrical move to give us some signal waves here on our fractal. And what we have now is essentially this 11% correction move, all right? This corrective move here of almost 10.97%. We're going to look at how this relates to Fibonacci and see if we can get some targets as well. And now we have this great run up. Let's see where this run up is. Currently, this run up is 10.5%. So if we go to 10.97 roughly, 10.95, there's where I get my 45.55, guys. That's the 45.55 target. That's where you can get that target, and that gives you this move here in the marketplace. Now, if we want to look at this again, just from a Fibonacci perspective, rally high, fib retracement down to your corrective low, the 886 is right here at 45.52. So you get confluence for this target. So let's look at this. Now, how do I get that 45.85 target? Well, that's simple. I've showed you guys this many times. I'm going to take these waves off. We're trading W patterns, right? You're looking at your W pattern here in the marketplace and getting a Fibonacci projection. There's your 45.85 target based off this W if the market decides to continue to rally up. So 45.55, 45.85 is where I'm predicting this rally to go and top out. Now, notice key component here, part of my core thesis for my fractal pattern, my larger fractal pattern to play out that we're going to look at in a second, is we're staying below the 4609. If we flip 4609, it disrupts my larger fractal pattern. We'll have to look for a new pattern. And at that juncture, you'd be going to push up to challenge your all-time high, most likely. Okay, so what I'm looking for here is this big move. We've had a big move up. We haven't had a key pullback yet. We're in low volume. I want to see if this rally starts to fade in the next 20 points to 20 points to 50 points here. And then you start pulling back. How you handle that pullback will determine if you're going to be pivoting back up to challenge your 4,600, moving up to your all-time high, or if you're going to be double topping out like you've done so many times in trend. Now that we have this fractal pattern, guys, we know we're looking at these equidistant moves here. Let's go ahead and do the same exact method we did earlier. Let's take the trend-based fib from that rally high to your corrective low, and we're going to superimpose this here right at 45.55. Right? There's your 45.55, and let's get some targets, assuming this would top out right there. So key thing I want to look at here, guys, a couple of key things. The 1618, right? The golden ratio is 37.37. This brings you back down towards your market low. Also, this move here, let me go ahead and show you something that's really interesting with this move. This move here from your high brings you down to 18.92% from that high. And it brings you down from this target level of 45.55, just about 18%, right? 18%. So once again, if you take these waves mathematically, we got there with Fibonacci. Now let's look at this with market geometry. That's that's 10.97. And again, we're just saying this wave's going to stop at 45.55, 10.98. So if you take this wave, that 10.97, 10.98, multiply it by 1.7, again, the root of 3, this comes out to 18. So this is your mathematical target based on the root 3, showing you 37.37. This is also Fibonacci's target with the harmonic expansion, the golden ratio at 37.37. Pretty interesting, is it not? Pretty interesting, even more interesting if it plays out yet once again. But we want to look at larger confluences for these targets because obviously this is not a new market low. You have to get down below 34.89. Where is the 2618? The 2618 takes you to 32.31. What have I been saying all through the year? The next market low would be 3,200, right? Why did I say that? 32.31. Let me show you this with Fibonacci coming up from the pandemic low. Okay, this is important to see. And I'm going to show you confluence in the marketplace. All of trading is about confluence. Let's take a fib retracement from the pandemic low up to your all-time high, 48.20, roughly. Yeah, 48.20. See if I got there. And let's see where this brings your 618. Whoop. Your 618 is down here right by your 2618. You see this? 3188, which is 3,200, 3231, let's say 3,200. Let's get rid of this fib so you can see some things. So again, from the pandemic low, the 618 is 3188, right? Why is this important? Because your previous market low, the 3489, took out the 50% retracement. Your next logical stop when the rally tops out, remember, when the recession is realized, the market will trade at historical norms, minus 33% from its all-time high. Let's look at this. From its all-time high, can you get there? minus 33%. There's your all-time high, your cycle high. Minus 33% takes you to the penny here at the 618 at 31.88. This is your historical norm of where the market will trade in a recession. And in a bubble, guys, where does it trade? In a bubble, it goes down historically 50%. So let's go ahead and go down 50% and see where that takes you to. 50% is going to take you down to that 2,300, 2,400 range. You see that 2389. And if we do this, now that we have this target, you can see just below the 886. If we do this, once again with our fractal target, our trend-based fib, there's our fractal corrective high, right? The rally high, I should say, down to your corrective low. And then let's go up to your current rally high, 4609. Do we have any confluence? Look at that, 50%. 50% exact drop at the 4236 harmonic expansion. 1618, 2618, 4236, 6854. This is the sequence here. Harmonic expansion takes you to the 50% level of just under 2400. Now, these markets tend to overshoot. You can see the pandemic is even lower here, down at like 2170. I think your range, once again, is 2000 to 2400. But this is how a fractal based, market geometry based Fibonacci analysis of a market can give you predictions and can help you with looking for patterns and searching for confluences of when too long, when too short, and what is the macro bear market cycle. How is it going to play out and confluence with this recession? Want to share this information with you. I think it's very powerful information. And again, if we look at this in confluence with our larger fractal pattern, our 5 waves up we had for the all-time high, a larger ABC, a wave down gave you 201 bars down, 201 bars down to your market low. Your rally high gave you 203 bars. Split the difference was 202 bars. If we have yet another law of 3 symmetrical pattern, then that means 4609 should not be taken out. And again, people are asking me, what if it is? Well, then this fractal pattern is invalidated. We'll be looking for a larger pattern or a new pattern to form. And most likely, if you took out that 4609, you'd be trying to come up to challenge your all-time high. That would be the next step. Again, still not my base case until you take out that fractal. I'm looking at this from the perspective of a low volume rally. This is a euphoric rally heading into a recession. And right now you have that window, guys. Everybody assumes the Fed's done raising rates. They haven't raised since the summer. They're done raising rates. The market holds up strong. When the Fed goes to cut rates, everybody on TV thinks that's a bullish event. It is a massively bearish event. Look at the pandemic when the Fed cut rates. Look at the GFC and .com. You followed the market down if you held on to your assets when the Fed cut rates. The markets cratered when the Fed cuts rates. When the Fed cuts rates, it is because the economic damage is already sustained. The lag effects will continue to catch up and the markets will sell off. But this is what I'm looking at still on this pattern, May 2024 for that next low. And that low, could it be the 3,200 number? Could be, or could it be much more severe? The 3,200 is your recessionary norm for a sell-off, okay? So we want to see how this plays out. If we start looking at this, Lee, I got to show him an esoteric pattern. You're so silly, Lee. All right. Our lunar cycles, guys, we got to look at this from an esoteric perspective as well, because again, it's just, if you ignore this and think it's just a bunch of bunk, that's great, but you're just missing trades. You're missing money if you don't understand what's happening here. Not every new moon or full moon gives you a tradable move, a pivot in the market, but so many of them have that you need to pay attention. Full moon top, look at this breakdown. New moon top, breakdown. New moon, here's our 4382 short, breakdown, right? 300 bar drop. And then when we look at the Steve Puet's crash cycle, because we're coming up November 27th, guys, November 27th is the full moon. And I want to show you this because, again, patterns repeat, right? So Steve Puet studied the 8 crash cycles, including the tulip bubble, 1989 Japan, the silver crash, and 5 other ones. And they all played out the same way from a lunar cycle perspective. You have a solar eclipse, which we had the Ring of Fire October 14th, followed by a lunar eclipse, which we had the lunar eclipse right on Halloween, which is our pivot bottom here. Look at the rally up to the candle off the lunar eclipse. And then you have to the next full moon, which is November 27th, this coming up Monday. We should start to see a topping structure. The market should start topping, and then you have 2 to 4 weeks of a sell-off, which lines you back up with the next new moon, December 12th. Why is this significant? Not only has it played out in 8 crash cycles, also, by the way, as I showed you in that esoteric video, it played out in the GFC. I didn't find it in .com, but it played out in the GFC as well. This is significant because you had a full moon here for your first double top. You had a new moon for your second top to your double top, and then you had a massive sell-off. And if you come up to this full moon here on November 27th, this is what the market would look like. Let's say you top 45.55 to 45.85, you roll back down, you get a nice retracement. Let's say you come down to the 44.16, you bounce back up. What's the next lunar cycle here? The new moon. This exact same pattern you did here, this exact topping structure. The exact topping structure, almost down to the same retracement level. You see this? You're at your co-equal high, 45.40 here on your first top. You're at 45.32. Your co-equal high, if you roll down and roll back up, if you top out on the 27th and the days after, start selling off, come back up for the new moon, you're doing the exact same pattern that you previously did last time you had this breakdown. And what was this breakdown? Let's just go ahead and measure this real quick. I want to get a percentage here off this breakdown from that top down to the low here is 7.5%. But if you want to be fair about this and take it all the way down because you just made a lower high, let's go all the way down, almost 10% move, 9.61%. So I don't know about you guys, but that's the type of move I'd like to trade. That's over 430 bars. That's the type of move I want to trade. So I want to see if we get this exact same breakdown again based off these lunar cycles. Be pretty amazing if we do. And so far, I mean, it's lining up for it. Look, the thing you guys have to understand is regardless of what you think about lunar cycles, Fibonacci, all of these different methods, you've had a euphoric rise, right? You've had a euphoric rise and you need a breather, I believe. I believe you need a pullback in the market. The market just can't keep going straight up and up without a pullback. You see it all along in trend. And you look at this on the daily chart, zoomed out view here. This is a pretty much a vertical line straight up. At a bare minimum, I would expect some type of pullback, and how the market handles this pullback will determine your next move in the market. Will you make a W like we did here, right? Here's your W and there's your rally. So you get your pullback. Your pullback will come up. Can you get another higher low? And then you come back up, you take out this fractal, you made a new all-time high. If you get the pullback, and you come down, come up, make a lower high, roll down, then you just did what you've previously done in trend multiple times, is make a double top. And the market's going to keep descending like it did, by the way, in the cycle of November 2021. The market kept falling down, even though it's the most bullish time of the year, as they constantly remind you on TV. You peaked out in November of 2021. You could potentially be peaking out again in November of 2023 with the sell-off coming through 2024, just like you had the sell-off in 2022. Keep these cycles in mind, guys. Very important information. Let's go ahead and move forward. RSP equal weight, guys. Again, RSP, same resistance. This is all the companies in the SP valued the same. Look how dramatically down you are. So you had your rally high in July. You're still well below it. You're not even at the 618. The 200's above you. I think 147 here remains your top. And if you look at your rally off your low here, actually, let's just do this. So we know the S&P is down 6 or 7% from its all-time high. And from where price is right now, you're down basically double, 12%, right? Again, 10 companies responsible for 90+% of the gains in the S&P, the weighted S&P. The equal weight, you're down, okay? You're down double digits from what the regular S&P is down, the weighted S&P. So let's look at the Russell, because if you want to do the same thing, it's the exact same thing. And for the Russell to really appreciate this, you really got to back this out. Look at a 3-day chart to understand its divergence here in the marketplace, guys, because it's monumental. Okay. The Russell made its all-time high within 72 hours of Bitcoin as well. And this is a massive drop. You're still down 26 26, almost 27% on the Russell, and the S&P is only down 6%. Again, just key concept here. Are 10 companies going to lift these other 2,000 companies up to them? Or are these 2,000 companies, which, by the way, made this market low and made a new market low, are these 2,000 companies in confluence with the rest of the S&P going to drag down those 10 companies? I think it's pretty obvious what's going to happen, guys. You need to be aware of this in the marketplace, again, because when the Russell was trading down at these fractal lows and it put in a new low, Bitcoin was down 70% from that 48.2 trade that I shared with you. 70%. The S&P was down 24%, trading down below 3,500, and the NASDAQ was down 36%. So be aware of that, because this is the broader market telling you the market is not healthy, the economy is not healthy. Everybody is chasing and trading performance and price action, stock buybacks. Everybody's chasing it into the new year, but this will give up at some point. And when you look at this, guys, again, the 618's up here, 1865 between. I mean, you're struggling just to get above. You're having a really hard time just to get above the 50. You nailed that 1830 here off this W pattern. Let me go ahead and show you guys this again. Talking about signal waves, let me show you this. So let me put this on the daily so you can see this a little bit better. Get more candles. There we go. So here we go, guys. Remember, we talked about this. We called this prior to the low CPI. We called the pump the exact target. People say, how did you get that target? Well, looking at this, I measured market geometry, 8.65% move. Okay, 8.65, 9% move. So I was looking for symmetry. Did I have anything vis-a-vis Fibonacci that would give me this target as well to go along with market geometry? The 1618 of our target of our Fibonacci pattern lined up at 1830. We had signal waves, equidistant moves in the waves, and then you got a retracement from 1830 all the way down to almost 1770. Okay, nice little move, and then you're just popping up around here. We'll see if you can get above this. Flip this here on the daily chart. You're below the 50. You got above the, I'm sorry, you're below the 200. You got above the 50. So you're wedged in between them. I think your upside is limited. If you were able to break out and confluence with the markets, we can look at higher targets. But this is a broader market, guys. Be aware. Those of you who are not aware, you are doomed. You are doomed to make some bad decisions if you think the market is going to, the first time in history, have bottomed prior to a recession. It's really unfortunate, guys. It's really unfortunate. And actually, I was talking to Lee. It really makes me mad. And I don't want to get off on a rant in the middle of TA, but this is the only video for the week, guys. I don't want to get off on a rant on this, but it makes me mad that Goldman Sachs says that the soft landing is very likely. I saw an article. I think they have the recession priced at like 15%. All the big banks saying the same thing. The soft landing is nothing but a transition, the quiet period before you go into the recession. And keep in mind, all these same banks didn't see the GFC happen. I was working at Merrill Lynch. Okay. We heard the CEO on conference calls. We're stable. This doesn't affect us. The Fed head Bernanke said the U.S. economy is extremely strong and resilient. They don't forecast a recession. He kept saying that all the way into 2008, when we know now the recession, because they backdate them, started in December of 2007. Okay, so they never see it coming until it's too late. That's why it's important to look at leading indicators and lagging indicators that have been 100% correct throughout history, because people get destroyed in these markets when you're stuck holding underwater assets for 7 years, 10 years. These things can be underwater for a long time, guys. Just want to share that with you. Targets on the Dow, where could we get to? Again, if we get a little bit more upside, 35.3. Why? Because it's the target off of our W pattern, okay? It's the target off our W pattern. That is Fibonacci. That is the 1618, 35.3. The Dow can do that in a day. It's 250 points away. We'll see if we can rally up to that level. If the S&P gains another 20, 30, 50 points to hit our target levels, we'll see if you can get up there. And again, from a fib retracement from your rally high down to your corrective low, that lines you up beautifully right here. If the 886 is right on top of it, you're just above the 786. So you might be peaking out here as well. The key component here to go along with my market thesis for forecasting, guys, is that you're not taking out your pivot high, right? Your pivot high over here, all these targets are below your pivot high, which is key for me, because you take out that pivot high, ruins my fractal pattern if we take it out on the S&P. And then you'll be moving up towards an all-time high. So let's look at this on gold as well. I don't know how the gold chart snuck in here. Oh, guys, I'll be adding, people have been asking for more crypto things. I'm going to add some crypto stocks by request. I think Mara, maybe Riot. I'll put MSTR, obviously, because I like to trade MSTR as well. And we'll do that on the Monday video, okay? So we'll do a little bit more of an in-depth on some crypto stocks as well. Looking at gold, guys, you got to watch the commodities heading into a recession. You see how weak oil has been. But looking at gold, gold went down 34% in the GFC, silver 61%. If you pull a fib from the all-time high, or from the high here in the cycle, you hit 1990, or you hit 1992. What am I looking at? 2009 is what you hit. But let's pull the fib here, and you hit 1992. I'm confusing my fibs. 1992 at the 786. We had this euphoric rise, parabolic rise up, and now you're going sideways. I think this is going to end up being distribution, guys, with the markets, unless some type of fear-based event happens, geopolitical event, okay? Fear-based event happens, you're going to go up from here. But 1992 hit the 786 perfectly. Why am I saying this? I think that you're just printing a big double top, guys. You got a big double top pattern forming here. When the markets do pull back, gold's going to pull back with it. Again, how it handles that pullback. Does it come back up? Does it make some higher lows and start fighting its way back up? Or does it just make another double top and trend on its long descent down? Okay. That's what the whole market's going to be about, is the market cooling off. Gold has been moving. Despite what the gold bulls say on YouTube, gold has been tracking, other than this parabolic rise recently, very, very closely to the S&P. We've overlaid the S&P many times, but as of right now, still you're printing a double top, okay? You got a double top. If you break this neckline at 1932, look for further dissension. The markets continue to rally. See if gold can come back up here and test these highs, the 2009 range. See if you can test these highs, and maybe you can get this as a pullback, right? Because the whole market is about M's and W's. If this is your pullback, that's your W pattern to take out your fractal high. So you can watch that level as well. Let's go ahead and move forward. Bitcoin. So what we have on Bitcoin on the 8-hour time frame, guys, we had our Wyckoff range. I've showed you the diamond pattern many times. I'm not going to show you that. Nice 20% move I shared with you guys on YouTube. And now we have the higher low structure on the trend line breaking up to the upside, back testing our Wyckoff range. Let me zoom out a little bit so you can see this, right? So we had this Wyckoff trading range of accumulation up here. You're on top of it. You started to form your Livermore pivot, right? You made your climax up here to the top side. You rolled down all normal. You back tested your range and you came back up. This was supposed to be your pivot and a successful pivot. Then you pull back at some level and go up, but you tested that fractal high and you start to roll over. But the bullish thing is you're making higher lows once again, just like you did here in trend, okay? As you guys know, I'm looking for the 41K hit at the 2618. To do that, you need to exit 38,050. Exit this. You might get a pullback with Bitcoin so parabolic, you could just hit this probably in like 1 or 2 candles, right? Looking for 41K. And this could be on a lag. This could lead the equities, or it could just happen independent of the equities. And it could be it could just be an exit move for the big money. Come up and tap 41K, build some type of structure, and then start coming down. We'll see what happens in the markets, but I'm looking at if the S&P tops out in the range I think it's going to top out at, Bitcoin can still do this move independently as well. And I think you have this nice bullish structure still here on the market, and you have a bullish MFI. If you can break out above the median line, you could see this move come to fruition. 41K, guys, has been my target, as you guys know, for weeks. Had some great trades here with the diamond pattern as well. We'll see if we can get up to that structure. And if we don't, by the way, if you just start rolling over, you'll be putting in, lower highs in this trend. And then you have to make sure you hold 35,321. If you don't, you start breaking down, then you'll be breaking down from that point. But that's not a concern at the moment, right? At the moment, looking to see if you can keep these higher lows going and break out to some new highs. And now that you're seeing the S&P move a little bit more, maybe you can start to see this move this week, this low volume week for the traditional markets. Let's go ahead and move forward. NASDAQ already took out its fractal high, right? This is your Mag 7 stocks in here. NASDAQ took out its rally fractal high. And now you're moving up to what? Our W target, guys. You're moving up to our W target of the 1618 at 16,144. NASDAQ's at 15,990 right now. So this is an easy move. You could get there tomorrow. You could get there at the end of the day if it wants to really start busting up. So 16,144. Look and see if we start getting some type of topping structure at that level. This would be the week to do it. Low volume week, easy to move the market. We'll see if they can move the market up there. And let's look at NVIDIA. This is a big one, guys, because this reports tomorrow after the bell, Tuesday after the bell, NVIDIA, and you're still hung up at 500. You see this on my screen? You're hung up at 500. You're overbought on the daily MFI. Where are you at on the 3-day? Just look at this real quick. 3-day, you're not overbought, but you're making a lower high here. So you got a little bearish divergence on the 3-day. Let's look at the daily again. Get rid of that MFI. When you look at this, so you're right at 498. Your price right now is 498 spot 33. This is sitting here waiting for the earnings. Nobody knows what the earnings are. I'm sure some insider traders do, but nobody's supposed to know what the earnings are. You're hung up at the 1272. If those earnings are strong or what the market perceives to be strong, guys, watch the 1618 at 527. Don't just simply trade it because it hits it. You want to see a topping structure. People say, well, what would that look like? Well, it would look exactly like what you're looking at here at the 498 level, right? You want to see resistance hold, get some volatility, get a retest that holds, and then you start seeing what type of structures you make. But 527 paints you a beautiful harmonic structure here, B to D, golden ratio expansion, 1272, square root of 1618, X to D, 1272 essentially for the A to C. This is a beautiful harmonic pattern. If you can get up there, maybe get some euphoria and then see if 527 holds, could be an awesome move. That comes out Tuesday, guys. And by the way, if that move is bad, you could see the markets, meaning the larger indices, react to that with some selling as well. Remember, this stock is up massively on the year, one of the leaders of the whole of all the indices. Let's go over the European indices really quick, and we'll do a couple individual stocks. So the FTSE. Again, guys, same thing. Our Fibonacci target was nailed, 75.39 at the 618. Market is still holding a bullish trend, near-term trend, higher lows through here. I think your trading range, I don't think any of this has changed. Your trading range in the FTSE is 75.39 to 76.14. Right here between the 618, 786, you're below the 50, you're below the 200. This is strong resistance here. If I'm right, and the U.S. markets will be pulling back at some point very soon, looking for that November 27th top, then I'm going to see if you can come up here and make another topping structure, because you've made some gorgeous double tops here in trend that have been tradable, and you have a nice bullish trend. So watch that range and see what happens there in the FTSE. Looking at Tesla, guys, Tesla came up to fill our gap, as we talked about. Again, just the W structure, right? It's all you got is your W structure. And now it's a wait and see. It's still a wait and see on Tesla. You came up, you pulled back, you're holding support at 230. Right now, price is 234, but not a whole lot to look at here on the daily. Let's look at the 4-hour. 4-hour, you have a baby double top here that formed. You want to see if this holds. If the NASDAQ continues to rally, you could get another impulse move here of Tesla, but you have gaps here as well. 4-hour looks bullish. What does the 8-hour look like here on the MFI? 8 hours kind of rolling over. I don't know. This is a nothing for me, guys. This is a nothing burger. I'm not at strong resistance. I wanted to see this at 252. It's not there. I don't have a clear pattern yet. You're kind of forming a double top, but you had a nice gap fill up. If you're interested in trading this, I would just advise patience on that. French 40. Again, French 40 has had a nice move as well, kind of following the DAX, following the U.S. markets. You have your low, your higher low once again. You got above the 50 and the 200 at the moment here on the daily time frame. 72.31, key resistance 786, 73.61. I would wait and see how you handle this range between 72.31, 73.61. Wait for some type of pattern to print in confluence with the U.S. markets. If they're topping out, you're going to get a topping structure on the DAX, on the French 40 as well. Let's go ahead and move forward. Here's the DAX. The DAX got up to above the 50, above the 200. Again, all these indices have death crosses. The DAX, the Russell, the RSP, the French 40. And so you have the death cross, and you're at 15,921. Trading range, guys, I mean, again, I told you this last video, 1618 at 16,179. If you can get super bullish off this descending W here, if you can get super bullish, that's where you'd be looking at. DAX is at 15,921. It can do that in a couple of days. Could also get hung up here at 15,978. Key support you want to hold 15,830, 15,834 beneath you. With confluence of the U.S. markets, I would wait and see on the U.S. markets. It's going to tell you where this is going to go. And let's look at one more. Ferrari, what else do I have on here? I have Adobe. Ferrari got past our 357 target. Look at this thing. It's just gapping, going and going and going. Big gap, big gap, big gap. More little gaps in here. So it got right past our 1618 off of our Fibonacci here, right? Our Fibonacci expansion, this nice long elongated W here of the higher low structure. It's just going and going, guys. When is this going to stop? There's a lot of FOMO here. The stock is over 50 PE. I'm seeing a lot of Wall Street stories about how it's got a lot of cover. Ferrari just sells a lot of cars. You know, the reason I'm looking at Ferrari, those of you in the Discord already know this. When we were shorting the EV stocks, shorting Rivian, shorting Lucid, because these things are expensive. And yes, we're talking about the top 1%, top half of 1% that are buying Ferraris. But when markets dump, when recessions hit, these types of things are luxuries. And it's the same thing when you saw that big company. What was a luxury company in the French 40? To help me out, guys, in the comments. Was that LVMH? I'm trying to remember who it was. But you saw them forecasting slower sales. They were highly resilient for a long time. This will come when these are not something that's going to be so heavily traded. And I don't think, by the way, it would go totally against my whole way I view the market to think Ferrari is going to be at like a 50, 55 PE. All the other car makers are going to be tanked. The market as a whole is going to be at 12 to 14 PE in a recession, but there's one stock's going to be high flying. This to me is going to just be like for solar. It's going to be like all the other companies we are looking to short. It's going to come back to reality and give up a lot of these gains. So the higher it goes, the higher the greater the fall. So let this thing go. Let it see where it goes. I mean, 2618's at 402. I don't think it's going that high, but just see where it goes. I want to see a topping structure form and give us some trades. Right now, you just have vertical candles. Last one, Adobe. Remember, I targeted 608 to 616 here on Fibonacci, 1618, based off this beautiful higher low W. And we're about to hit it. 613 to 616 is the 1618. So we're about to hit it. But again, all these individual stocks, guys, I caution this all the time, not financial advice, just what I do. Do not trade individual stocks until you see the indices also topping. Individual stocks can move, okay? You want to see some sideways action on indices or topping action on indices, especially if they don't have their earnings baked in yet. And you have December 13th for Adobe, but this is a good one. I like this one. I like it around the 1618. Again, plus 50 PE. AI play, massive gains, up 120% off its low. Okay. Good stock to track. Guys, have a fantastic week. Be safe out there shopping. New video for you Monday. I'll talk to you guys soon. Take care, everybody.